Alrighty, it looks like we're just about to get started. Welcome everyone to another one of our free public webinars with Investors Underground. I'm Cameron. I'm also here with Nate. Nate, are you there?
I am.
Okay, cool. Nate and myself do regular webinars for Investors Underground members. However, we realized that it had been a little while since we'd done something free to the public. So we reached out to everyone and asked, hey, what do you want us to cover? We got all your responses and there were literally hundreds. So we grouped them into different parts and we're going to try and tackle them during the webinar for you all. Just before we get started, can I advise everyone to go to view our terms and conditions? You can see them at www.investorsunderground.com/disclaimer. Neither Nate nor myself are registered professionals. This webinar is for educational and informational purposes only. I hope you all really enjoy what we've got planned for the next hour for everyone. So what are we covering today in this webinar? Well, as I mentioned earlier, we've got hundreds of questions submitted by you all. So to tackle them, we've grouped them into similar themed questions based on what we thought people were trying to get at through their questions. We included a high-speed lightning round to try and rapid fire off any of the questions that didn't really fall into any of those similar themes. And we're also talking about the best ways to get started with trading in the Investors Underground community. But just before we get into all the content of this webinar, I know that myself and Nate wanted to give a quick mention to the charity event that we've got coming up later this year. So basically, Traders for a Cause is a charity that was founded by Nate with the goal of bringing traders together to do something good for the broader community. There are a number of events held throughout the year. The biggest one is in Las Vegas annually, and it's a great opportunity for traders to get together, network, attend a conference with keynote speakers, play some golf, have some dinner and drinks, but most importantly, raise money for much needed causes and charities around the world. So if you're interested in finding out more about any of the Traders for a Cause events, you can go to the website, you can click on the 2017 event and enter your email address to make sure you're updated with information about all of the stuff. So whenever we get a question or whenever we get questions from less experienced traders or people who might be new to the trading world, it usually gets broken down into a few kind of subsectors. So beginner questions, kind of small picture versus big picture questions, questions that kind of leave you scratching your head a bit, and then great questions, which we love to see because, it shows an understanding of the content and people are excited to learn and stuff like that. So for all of the beginner questions, I guess most of them have been already answered via our beginner's trading guide on YouTube. So during 2016, Nate and I spent a lot of energy and time putting together a library of information on the Investors Underground YouTube channel. It's 8 videos long. They're around 30 minutes each video. And we go over long, shorts, platforms, brokers, and all of that information is still very relevant to what we're doing now. So I challenge anyone to find a cleaner resource or a higher quality free content library on the web. I highly recommend going and watching all 8 and maybe rewatching them, because some of the questions that came through, I guess, would indicate to me that people haven't gone through that thoroughly and taken notes and all that kind of stuff. So that would be a great place to start. We're going to be recording this webinar. So if you are watching a recording and you haven't seen those 8 videos, then I'd recommend to go and check them out before continuing. So small picture versus big picture. And this is, I guess, one of the traps of, there being a lot of information out there and people's everlasting quest to fill their heads with more knowledge, right? And sometimes you can, I guess, drown yourself in inane details, right? So here's an example of one, and I haven't written who asked it. Sorry if it was you. But, someone was asking, if your entry gets retested 3 times in a stock that you're not familiar with, what would you consider doing if you're only at half size, right? And this is a great example of a small picture kind of question. Like there is no useful answer that we could give that would meaningfully impact this person's overall trading, right? So when we're looking at the questions that are in your mind, or the questions that you're looking to have answered, go bigger picture. Right now, big picture doesn't mean how do you know when to buy and sell, right? Because that's it's too open-ended, right? And we could spend hours about talking about that. But you don't want to drown yourself in these small details like this question. So
patterns and stocks that you are familiar with. I mean, if you're out of your comfort zone a little bit, sure, you're testing out new things. But as a beginner, as if you're starting out, things like that, you shouldn't really be out of something that's familiar to you.
Right. And then I've also got on this slide, big picture rules are important, but sometimes there isn't a answer for every kind of question, right? Trading isn't like programming where you've got a, if this happens, then this happens kind of thing. Trading is much more fluid than that. So while you can have sets of rules, your big picture set of rules isn't going to answer all of these small picture kind of questions all the time. So then I mentioned questions that kind of make you scratch your head. So sometimes these are weighted questions. So we got this one coming in from initials M.A. Hi Nate, I've been listening to many successful traders who all say that day trading is no longer viable due to high-speed trading black boxes. Can you explain why this is and how you still make money, right? And I guess when you read something like this, you can tell there's a lot of I guess, bias behind it. This person seems like they're convinced that these other people feel that they can't make money in the market anymore. But when we get asked a question like this, how are we meant to respond to it? We don't know who he's been listening to. We don't know what their strategy is. We don't know what patterns they base their trading upon. And then, he's saying that they're saying that trading is impossible now because of all this algorithmic black boxes. Well, we're still doing what we do here day in and day out. We've done it in a bunch of different market conditions. There's no useful answer to this question apart from, yes, the patterns still work, and there's a big community of traders and investors underground right now who are trading upon them and, seeing success. Let's get started on some of the good questions that came through today. So speaking about getting started, that's my nice little segue. Hi Cam, hi Nate and Cam. I live on the West Coast and I work a full-time job from 9 to 5. Is it possible for me to also have a career day trading? Given my situation, what's the best way to get started? And this question was from Ryan. So I might just say a few words about this and then pass it on to Nate. But I think the most important thing with any person getting started with anything that they don't know how to do yet, or anything that's new to them, is taking baby steps, right? So in trading, what are baby steps? Well, a lot of people come into trading and they might be in between work. They might be working in a job that they don't like. They might be extremely interested by the subject matter and never have tried it before. And some people, I guess, dive in head first, and quit their job to be a day trader, or deposit big amounts of money and spend a lot of money in a trading platform and a computer and a setup and all that kind of stuff before they even know whether trading is for them or not, right? And the only real way to know is to learn about it and get some experience and chalk some runs up on the board. And what I'd really recommend for people starting out is to start with trading education, because as you're starting, you don't know what you don't know, right? So you're coming in blind, and trading is a fast-paced, difficult environment, even for people who are experienced. So You don't want to be the fish at the table, coming in, with a bunch of money, overexcited and throwing it away, right? So education is at the forefront of, your first baby steps. And that'll also give you an opportunity to learn whether trading is something that's going to play to your skills, right? Because, you might be a person who is extremely undisciplined. Or you might be a person who has tendencies to gamble, or you might be a person who's extremely disciplined and great at doing homework and all that kind of stuff. Well, you're going to find out what the trading world's about during your education process and see if it plays to your strengths, right? So for this person, I think his name was Ryan. Yeah. So for Ryan, he's on the West Coast and he starts his job at 9 a.m. So I definitely wouldn't recommend changing his working situation until he has at least gone through education. But given that he's on the West Coast, he's got a great opportunity to be able to start early in the morning because markets open West Coast at 6:30 a.m. So, a lot of the action in the markets happen between 9 and 11. He's got an opportunity to be able to be there during those hours while still working his full-time job, right? So after he's gone through, some trading education, he can go and trade a paper trading account to see, if he can put some of the things that he's learned into practice, and he can do that part-time for those 2 hours in the morning before he has to go to work, right? So while keeping his full-time job, he can get some part-time trading experience. Then I guess if things are looking good with the paper account, with part-time trading, he could look to move to a small live account, part-time again, right? So with that same kind of strategy, focusing on the first 2 hours of the morning, he could take, he can take that to a small live account and see if what he learned in the paper trading environment translates to his live account, right? And then, maybe much further down the line, he can look to say, well, my live account's going good part-time. I'm considering transitioning this to a full-time thing. Can I make this work? And we've got some more kind of details on, we've got a slide a little later in this Q&A about, what you should have when you're starting to trade full-time, or what could be suggested or recommended. Nate, did you want to touch on this for a moment?
Yeah, like you said, from 9 to 11 or so, when you do scans at night, you're basically preparing to react out of the open, so that if what you thought was going to happen on stock XYZ happens, you can react to it out of the gate. So probably 70-80% of most of my risk, most of the trading that I do is out of the first couple hours, the first 2 hours or so. And then I just try to get on the right side and let things patiently work throughout the day. So not that I would recommend during a, if you have a job and whatnot, to carry positions over. But for example, if you were on the right side of the trade, say, you got short something and you're up $1 a share and you want to let it continue, you could ride a stop out, things like that. But then again, you're going to be checking your phone and doing a bunch of things when you should be doing your job. But that's what most part-time traders do. They're always just trying to figure out how they can not get caught by their boss when they're checking quotes. But realistically, most of the actions in the morning, at least for me, my style, momentum, things like that. And like Cam said, you can't just decide to go from a part-time job to trading and making it work. You need to actually prove to yourself that it works. So you need to make certain that you actually get the concepts and understand how to react to things out of the gate. And paper trading is a great way to do that, especially when you have a job. I'm assuming that you probably need to save up for something like this, and that takes time. So why use real money if it's not working on paper? So for example, if you're going through things and you're sort of grinding down in a paper trading account, that's typically what happens with traders. You're going to lose first. You might be one of the lucky ones that has some beginner's luck and goes straight up, and you think it's that easy each time, and then before you know it, you're right back to zero. And you're kind of restarting. But point is, start with paper, go through the motions, go through what you take from the videos, go through what you take from the setups. Is it working? And then slowly apply it to real money, and then slowly scale up from there as it makes more sense. Each level, each time that you add on more size is going to be a new emotional impact to you, which is going to take a little bit of getting over. So there's always new learning curves along the way, but being a West Coaster and working 9 to 5, yes, you have probably the two most powerful hours in the market for momentum.
Very good. So also speaking about getting started, hi Nate, what is the least amount of money I can have to start trading? This is from Jim C. And, one of the things I think people kind of miss is when starting out, is they don't give themselves a proper fighter's chance in this game. And everyone seems to be kind of focused on the minimum to trade versus the minimum to succeed, and trading is a career where you kind of need to have money. You need to be capitalized from the beginning. So you need money for a deposit in your account. You need money for, trading education and to join a trading community. And you need money for day-to-day expenses and to live and, rent and electricity and all that kind of stuff. And, I see a lot of traders come in, and if they've got, $500 or $1,000 and they think that that's the right amount of money, to be able to succeed, just because it's the minimum amount of money that a broker will accept as a deposit. That's not correct. You can't make it if you're coming into this game with $500, because, a commission each way is, $3 to $5, and you've still got your bills, you still got your rent, and you can't expect to go and start with $500 and be successful right away. Now, $500 could be enough money to get started to learn about to trade, and it could be enough to get a live paper trading platform going, right? But really, I see a lot of new traders coming in undercapitalized, and I think that's one of the big reasons that new traders don't make it in this game, is they don't leave enough wiggle room for the learning curve, and they don't leave, they've got very high expectations of returns quickly, whereas this is a process that takes time.
Wonder why that is.
Well, I think there's probably some bad marketing out there on the internet that suggests it's possible. But, I think you need a better chunk of money. Now, what is the minimum amount? Well, it's going to be different for everyone. Everyone's got different amounts of expenses in their day-to-day life. Everyone has different appetites for risk. But, I'd say anyone starting with less than $2 or $3 grand is really not doing themselves any justice or really putting that money to good use.
You just need to be realistic with your expectations. I mean, if you're starting with $500, you're not giving yourself much of a chance. $3,000, same thing. And I mean, if you're only starting with $3,000, I mean, it's probably a case. I mean, look, it can be done, but as long as your expectations are set correctly. But regardless, I mean, if you only lost 20 or 30% as a learning curve, I mean, you've really dwindled your account down to a minimum. So it's going back to the whole paper thing. I'd rather see people just get absolutely demolished in a paper account than trying to start with a bunch of money and just absolutely losing it. So and like Cam said, I mean, education, at least you get something out of it. You have to be realistic with your expectation. There's so much that's online that will suggest that it's just that easy. So it's just about how you look at it and what you're trying to do, and slow, steady. And the more that you educate yourself, the more that you are more focused on actually the process than, I want to turn $3 grand into $1 million or something. The more that you focus on the actual process, the further you're gonna get.
Yeah, and I've got one last point here. Supplemental income important. And this is a key point, whether you're driving Ubers or whether you've got a small side business or whether you're mowing lawns, whatever it is, it's often great to have something that's going on the side as well as trading or during your trading, just so you know you've got the bills paid, and that helps with, these day-to-day living expenses, and it's going to make you a much more relaxed trader where you don't feel like you have to push the envelope every day because, you need to make this week's rent or something crazy like that. So
that's a big point too, right there is, good traders wait for opportunities and they're patient and they wait for their entry. Waiting for the entry is probably the hardest thing because you want to be involved. But, if you set yourself up with a goal to make X per week and, here we are, it's Friday tomorrow, and you're actually negative $200 on the week, but you set out to make $1,000 a week, you got to make up for the lost ground. You're already 4 days into the week and you're down, and well, guess what's going to happen? You're going to end up, doubling that loss and then some. So like Cam said, it's always however many other supplemental type of incomes that you can kind of give yourself the best chance makes it easier, because then it takes the emotions out. You're trading what you see. You're waiting for the stocks. You're not taking this trade just because you have to, because not necessarily because you have to, but because you didn't make your quote unquote quota, and this is the trade that you see right now. This is the trade you're going to go for. And it just is not the right thing to do. It's not the right way to look at trading.
Favorite brokers. Hi, Nate. Which are your favorite brokers at the moment and why? And this is from, I think around 20% of the questions had to do with brokers. So let me address that for a moment. You need a broker to trade. That is true, right? But the broker is just a vehicle to trade your expertise, right? It's nothing more than that. It's just a tool to be able to execute your trading expertise, right? So if you don't have any trading expertise or any experience or knowledge, then whichever broker you have is going to be meaningless. The outcome of whether you've got a broker that's got cheap commissions, whether you've got a broker with great borrowers, it doesn't matter what your broker has. If you don't know what you're doing, your money is going to be lost to the market every time, right? So, when I look at hundreds of questions and a fifth of them are people asking me, hey, what are the brokers? I see a little bit of an imbalance of where people are placing importance. And I think there should be a little less emphasis on, what are the favorite brokers, and a little more emphasis on how these patterns work and stuff like that. But given so many people asked it, Nate, do you want to go over your favorite brokers at the moment?
Yeah, and I also, on that note, is a lot of people always sort of blame commissions. Yes, commissions can definitely eat up a good portion of, small trades and that learning curve. But at the same time, at that stage in your trading career, maybe it's also worth looking at the trades that you are taking. And, if you're going to be, when people send me charts sometimes, and, you can put the arrows, for example, on Dash Trader, you can put the arrows of entries and exits. And one of the things that I see with a lot of new traders is as soon as they get in the trade, they're already on the exit. With the first pop or the first drop, there's another candle that they're either exiting or buying, covering. And that's where your commissions start to add up. If you're actually looking at a big picture idea and coming to the market with a solid trade, knowing that, okay, I'm trying to make this work. I need to come to the market with a plan, a big picture idea. So there should be maybe one or two entries and then an exit later on. If you see your chart and you're in, out, in, add, in, out, in, and out, in, out, you're going to have $300-400 of commissions, and you're not going to be able to make up for it. So half of the battle with commissions is really picking your spot and being patient for those entries. And if you can do that, then you're going to see your commissions go down a lot. On the flip side, commissions are just really the cost of doing business. So it shouldn't really be a big percentage. And as you scale, that number is going to get smaller, obviously. There's ways to reduce it by adding liquidity and whatnot, but that's a story for another day. But as far as brokers, as usual, Centerpoint and SpeedTrader are your sort of direct access a la carte style brokers. Like Centerpoint is really good for the sophisticated style trader. They have a 50,000 minimum, and their prices may not be as competitive as some, but the quality and the care sort of that you get, makes it worth it. The borrows, the customer service, they're awesome. SpeedTrader, they are great as well. They have ETC and core clearing. I should mention Centerpoint, SpeedTrader are your really direct access, great for the active trader. E-Trade entry level, now that, forget who put them down first. I think either Schwab or Ameritrade or something like that had dropped the commissions to like $5. But before, they definitely, the commission sucked at E-Trade if you were just sort of starting out. I mean, they were $12.99 for an entry, $12.99 for an exit. So you're talking $25, which, yes, then you can have the commission conversation and say that, it's a lot to trade. But now I think it's $4.95 just starting out. I mean, as you trade, you can bring that down with them, absolutely. But my main broker, the one that I push most of my volume through right now, is actually E-Trade, and then Centerpoint, Wedbush. But other than that, interactive brokers is always, if you've got extra capital laying around. One of my good trading buddies, somebody asked him one time why he had TD Ameritrade as an account. Like, everybody knows that they hardly have any borrows. And he goes, you know what? He's like, it's either I put the money in a bank account or I get one trade a year that maybe TD Ameritrade has the borrow on that none of my other brokers get, and I'm going to make more in that account than I will in the bank. So that's why I have that account. But, there's Thinkorswim, there's TD Ameritrade. I think they're kind of merged now. There's a ton of other ones. But as far as, our momentum style of borrows, I'd say that the top three are Centerpoint, SpeedTrader, and E-Trade.
Very good. Hi, Nate and Cam. Which platform are you currently using? Jake P.
So DAS I always use. It's just what I'm used to. And one thing I would definitely suggest too is always have two and have a second one up just in case, just so your eyes are familiar with it, because sometimes platforms go down and there's nothing worse than using charts that you're not familiar with. And on that note, you never know when they might update something, or the point is like, what if your eyes were only trained for one platform and one platform only? I mean, think about what would happen to your entries, things like that, if you're only used to seeing one thing. So usually I have a couple different chart programs up. So I use DAS as my main. That's what I've used since day one. I'm used to their charts. I like them. I like all the options, things like that. Sterling I mainly use for it's for the Wedbush account at Centerpoint, but I mainly use only the order entry. So I just have a bunch of level 2 boxes up with the routing options, things like that. But I'm not using their charts. I have one chart up, and same thing on my laptop. If I'm mobile, I usually use a couple of their charts as well. Lightspeed I'm not familiar with. I don't use it. I know a lot of people do. And then the only other one is E-Trade Pro. So again, I have a couple of E-Trade Pro charts up just to kind of be familiar with them and see them and whatnot. But again, just like Sterling, I basically only use the order entry. So DAS for charts and order entry for the rest of the stuff. WebTrader, I mean...
Nope. Just one word, right?
I mean, you pay for what you get what you pay for, and I think WebTrader is free. So, and if it's not, it's pretty cheap. But I mean, look, you want to be in something, and you wonder how come that guy got the fill before you. It's because you're busy typing in and clicking buttons on WebTrader, and you could have already just point and clicked and been in.
Yeah, it's really false economy to trade on a web trader because you lose a piece of your edge, and your edge trading is what makes you money. It's so important. And if you sacrifice a piece of that to a slow platform or a clunky kind of web browser platform, then you're sacrificing money. So you're kind of stepping over dollars to save pennies, right? Mobile app, reality check, please. So if you think you can trade profitably on a mobile app, there are a lot of people trading on mobile apps. I would say not a lot of them are trading profitably, but it seems to be a hot new thing. There are a few brokers now that only offer a mobile app for trading. I would say, no one who's day trading on a mobile phone is making money, right? So mobile app is okay for, if you've got some stuff in your 401k and you want to check it out while you're at the gym in between sets, sure, right? That's one time you might be able to use a mobile app. If you think you're going to use a mobile app trading, on a beach, day trading, I mean, that's ludicrous.
I think the main thing with mobile apps have come a long way, and they're great charting, all that kind of stuff. But it's a great way to check up on positions, not necessarily trade. If you're looking to day trade off a mobile app, you're crazy. But take Eric, for example. If he's got a couple positions on and he wants to go golf, I mean, damn well he's going to be in the cart checking checking what they're at, level 2 and all that kind of stuff. But is he sitting there going, all right, buying 5,000 more? Okay, I'm going to do this. I'm going to do that. I'm going to do that. No, he's not at all. He just wants to see what they look like. Same thing. Like for me, I'm an addict. So if I'm on vacation, yes, I'm in my lawn chair, probably on Dash Trader platform, looking at what things are doing and what I'm missing. Absolutely. But if you think that you can make it work with a mobile app as your main trading thing, no.
As your primary source of trading data, right? That's what I'm saying.
The only other thing, the good part about mobile apps, which is great, is, and even Sterling has a good one now too, that they hadn't had one for a long time. But you know what? Power goes out, internet goes out, and cell phones don't. So it is a really great thing. And even E-Trades is fine. I mean, it's not anything compared to DAS, or even Sterling's a lot better. But you should always have some type of backup. And obviously you can do the mobile hotspots and things like that for your computer and connect that way. But sometimes it's just easier to pull it up and check on there. So
right, cool. Hotkeys. Hi Nate, do you use hotkeys when you're trading? This is from Yong X.
There's a huge learning curve. I'll go real quick and then you just hammer it out. But there's a huge learning curve with hotkeys, to be realistic about it. I've tried personally. I added like 6 different buttons, swipe the offer or take the bid, whatever, and do market this or go best offer, all different things. And it's very hard to change the type of trader that you've kind of learned to become. And I had them up there for the longest time, and then they just ended up taking up real estate on my screen. So I pulled them off. I would like to, and I probably will in the future, try again with maybe actual hotkeys on the keyboard itself and not just like the hotkey buttons. But it's very difficult, and it's definitely a learning curve, just like anything else. It's almost like learning a new platform to get used to doing it. And there's also like the trust type issue with it too. I like being able to push the button and then confirm and then do it. But if I was rapid in and out and things like that, then maybe. But for right now, I've always just done it manually, and it's very hard to change.
Yeah. And I think a point here is, how long are you in the trade? So with a hotkey, if your entry and exit needs to be 2 or 3 seconds quicker, that would suggest to me that you're, a bit more of a scalper, which, is a strategy that, exists. I don't think it is as strong as the strategy that we practice at Investors Underground. But if you're in trades, if you've got a real plan and you're looking for those big picture trades, and you're going to be in them for an hour or two, does saving 3 seconds on your entry or 3 seconds on your exit or 1 second or 2 second make a difference? And I think the temptation with this whole hotkey thing is that it encourages people to kind of push buttons and go for action rather than quality. And what we like to focus on is obviously quality trades. And I believe there's a question about the average time of trade coming up in a bit, but high quality, big picture trades. And that kind of style, I don't think it lends or it doesn't really need to lean on hotkeys that much. Float/market cap. Hey Nate, do you check the float, market cap, or short float before entering a trade? How do they affect the volatility of the stock? This is from Joe J.
I'm aware of the float, not necessarily market cap or short float. It's not something that I am I don't check it before a trade. There are occasions where I see something that's got 30, 40%, of the float short. And obviously it could turn into a monster short squeeze or something like that. But most of the time when those things are that high, there's a reason for it. And even the big gap ups get sold off and things like that. Before I make a trade, I don't always just go, okay, well, what's the float? If I was looking to get short, swing it, things like that, yes. But most of the stuff that I trade, at least now, most of the stuff is trading millions and millions of shares. And I'm not shorting the momentum trades as much as I used to. I'm just sort of joining trend after backside happens, or joining trend, on dips if it's over VWAP. So it's not as important as, back in the last, year, 2 years, we've had some major just parabolic moves. And I think, Cam, what was the last one? Maybe ETRM? I don't think we've really had any ridiculous reverse split style low float type moves in a while.
Cool. Level 2. Hi Nate, how can I get my hand held to learn level 2? This is from Eddie W. I don't know if Nate offers that kind of service. Nate, what can you say about this?
Look, level 2 is something that a lot of people ask a lot of questions about, and it's totally subjective. It's there is no right answer, and what somebody else may see, you may see something else. The main thing that I use level 2 for, as far as the best thing I think you can learn from it, is when you see massive bids coming into a huge level and just a bunch of volume, the offer does not move, and then the bids disappear. That's very telling. Huge stuff move. Same thing on, it's coming down, massive offers, and then the bid just absorbs everything in sight, and then the offers disappear. Very telling. Other than that, there's just so much noise, and everybody's got an opinion about it. Everybody buys because they see a 50,000 share bid or a 100,000 share bid, but guess what? That bid's just there to entice you to buy it. I don't focus too much or too much leverage on a level 2 just because I see something.
Right, cool. Having a plan. Hi Nate, I'm having a hard time finding stocks in pre-market and intraday. I'm using TOS for the moment for the scanner. Most of the pre-market videos I watch, traders are picking stocks that aren't showing up in my scanner. This is from Ray C. So let me just touch on this quickly. Scanning for stocks pre-market and intraday kind of tells me that Ray doesn't have much of a plan coming into the day. And homework is really what makes you money in this market. Chasing around stuff that's moving, sure, it's like interesting to get to know what is hot and what is not and that might form part of, your scan for the next day and that kind of stuff. But, homework is really where you make your money. So scanning for stocks the night before, is a process. We've gone over that together, myself and Nate, in the 7th video of our beginner's trading guide on YouTube. You can check that out. Scanning intraday for movers and, what are the best resources? I'm going to say the best stock scanner is not a stock scanner at all. It is a trading community. So obviously, Nate and myself are very biased. We think the best trading community to do that in is Investors Underground. But, you can see what's moving on Twitter. You might not understand why it's moving, and you might not, get a lot of the relevant information. But if you're looking for, stuff that's moving, you can do so on Twitter. You can do so in your trading community. You can have a stock scanner like Equity Feed where you set different parameters, but, there's nothing more valuable than having a few hundred sets of eyes on the market and a trading community calling out stuff that is going to be relevant. So that's my kind of take on that. What do you think about Ray's question, Nate?
I mean, most of the stocks that you're going to commit risk to, you want to have some sort of plan, and you want to have a plan coming, from the night before. Absolutely, especially in this market where things are going nuts. Pre-market, yes. Pre-market, I just look at the gainers list and then I add things to the plan. But overall, the ones that I want to react to are typically from the night before. But homework and scanning at night, even if you don't have 5 or 10 of your main stocks that this is what you want to trade, going through all the charts that have been running lately is also some sort of homework because you've seen them at least one time. That way, when they come up on scan in the morning, if you see it gapping, you've kind of familiarized yourself with the chart itself. But it's very important to do your homework the night before. Come with a couple sets of plans. I always add a couple in the morning from what's happening, but at least half the stocks that are sort of my plan out of the gate are from the night before.
Nice. Overcoming fear. I have a lot of fear when getting in the trade, even a small amount. Is any solution for it, or should I just forget about trading? So, a comment on this is it's not often that you'd be afraid of something that you are quite competent doing. And this comes into, the thought of confidence versus competence, and I think a lot of confidence in what you do comes from competence. If you're an expert at something, then you won't have that fear because you know that you can do it well. So, an example here, this may be oversimplistic, but, are you afraid of writing your name? Well, you know how to do it. You know the steps that are involved. You're probably not going to get it wrong. I'd hope that you're not going to get it wrong. But really, experience here equals expertise, and then that expertise will give you the confidence. Now, your fear could actually be serving you well. And that's basically your brain telling you, I'm trying to do something that I'm not good at. And it will make you feel very uncomfortable. That's a good thing. You shouldn't be doing something that you're not good at yet. You should really know what you're doing before you start clicking buttons.
Well, on that same note, if it's fearful, it's probably coming from, like you said, just kind of not knowing what you're doing. Or number 2, fear of loss and fear of, losing the money that you're putting in. So it's sort of like a transitional thing where you start with paper, and then right now, if you're just trading and you've got a lot of fear, just go for a couple shares, 100 shares. Even if you're losing on commissions, just go through the motions, and if it works out, then go for the next trade a little bit bigger, so on and so forth. And then over time, you're going to get to the size where you were when you were fearful, and it's just going to be sort of second nature by then. But obviously, it's for anybody. Some trading requires swinging a little bit, and I'm not talking about swinging huge sizes, but just it just does require being down sometimes first before being profitable, and that's just the way it is. You can't be 100% of the time. So
cool. So Crypto. Let's we've got a lightning round of questions coming up, but we might need to start that lightning round a little early. So, crypto. Nate, are you interested at all in cryptocurrency?
Yeah, it's interesting, but I really don't care. I mean, it's just noise. I've already missed quite the boat, and I'm not. I care about my money a little bit too much than to. I mean, it would have been nice, but you can say that about anything. It would have been cool to put a couple $1,000 in Apple on day one too, but
Right.
it is what it is, and it had a huge move. Maybe there'll be something that is interesting in the future on a pullback, but
I think I've been watching this crypto move. It reminds me so much of the weed move of 2000 and was it 2014, 2015?
It's even earlier than that. It's like the beginning of penny stocks when back in 2000 when I first started trading, 2003 range and stuff. Even before that, there was just everybody was interested in it. And like even when I worked at Staples, there was this the copy center manager or whatever had a hot tip, and like everybody's like, hey, right. Have you heard about this? And even I just got 2 new screens in my office, TVs, and the guy that was over that does like the audio and stuff, he was like, hey, I gotta ask you, what do you think of like Bitcoin? And I'm like, shit.
That's the market top right there.
but again, that was at 15.
But it's exactly the same as like the OTC.
Though. That was at 15 or 16. It was only like a month and a half ago. But right. I was just like, honestly, I mean, I don't know. I really don't know how to answer that. I thought it was done at 500, 900. Who knows? But the point is if you find an edge in it, then great. Like Cody, for example, has been kind of following it, so he has sort of an edge. But as far as me just opening an account just to, I got to buy, there's no edge there. But
right.
It's
not going to the moon.
Right.
Right.
But if you do develop an edge and you see a reason to trade it or an entry, whatever, then by all means. I mean, maybe there's an opportunity there, but
right. I got a email yesterday, and a guy said, I wish I had $20,000 to stick into Bitcoin. I've heard it's going to 500,000. Right, those were the action. I'm like, hey, look, you got to take this stuff with a grain of salt. Like this is the talk that was in the weed move. This was the talk that was in the hot pick stuff where your taxi driver's telling you, hey, have you heard about this stock? And I guess crypto's coming into the mainstream now, and the price is getting pushed around because people are ready to jump in, and that's the same thing in the OTC market when that had its big run. Same thing, that I see going on in crypto now. So, next question. Borrowed money. Hey, Nate, I'm considering my options to borrow money to get started trading. My first choice is from my parents, but was wondering if there are any other ways to get capital, funds/investors to start trading myself. This is from Theo.
Never do that. You never want to take money from people, 100%. I mean, and family, there's just never. I mean, it's just kind of, you're not supposed to mix business with family, things like that.
Extra level of pressure, right?
Yeah, you don't want to turn your family gatherings into like partial business meetings, things like that. So I wouldn't suggest it. I haven't had a bad experience with it, but I just I've heard lots of bad experiences, and
yeah.
You never want to raise money for. I mean, especially if you were doing it, then you wouldn't need to raise capital, and
right.
Never raise money for something.
Right. Yeah, like I mean, you can't raise money from friends and family or even investors to go down the learning path of trading because it's not something you're good at yet, and you don't want to add or compound that extra level of stress, thinking I'm losing dad's money, or something like that. Trading uses money to try and make more money. I don't think that you can come into trading broke, right? Because you, by the nature of the business, you need money, right? Whereas, if you want to practice, if you want to become a great basketball player, you can go down to your local court and shoot hoops all afternoon and it won't cost you a cent, right? But trading is a business that involves money, and you can't come at it if you don't have any. Time of the day. Hey Nate, what's the best, most profitable times of the day to trade?
Just real quick here. I mean, if any time in the past, I probably would have answered, 9 to 11 a.m. That's where I do most of my trading. But quite recently, I mean, it's in the last 3 months or so, it's really turned into a full day. I try to let things work throughout the entire day. I get into pretty sizable positions, as long as the trend is continuing to unwind. For example, NUE. For example, that one today, it stayed under VWAP the entire day, and I did not cover a share until 1 to 1.5 minutes into the bell. So I try to let things work as long as I can. Had it started to reclaim trend, things like that, I would have gotten out. But lately, the most profitable has been, just things, letting them work throughout the day.
Cool. So, we've got a question here. Setups working now. Hey Nate, which setups are working the best in this market? Now this might be a little open-ended, but our most recent State of the Market webinar, the content in that is still very relevant. So, you've got your reverse split and runs, the momentum kind of plays. You've got some short squeezes, and you can track, I guess, the forced buy-ins. Like if you look at settlement day, you can see those secondary moves based on the forced buy-ins. I got a point here on easy to borrow versus hard to borrow. Nate, did you want to talk about, I guess, a little bit of a difference that we've seen in the market at the moment now that shares aren't as easy to borrow?
Yeah, I hinted upon it earlier, and I think that, there's a couple firms that have kind of switched how they do things. Some internalization at certain firm and also just the price of borrows, some of the clearing firms have changed and things like that. And I think just the borrowed shares are potentially in smarter hands. And I guess by smarter, I mean people waiting for entries, people that have more money that are looking bigger picture versus just a quick intraday type of flip that easily gets squeezed out throughout the day. So hitting upon the point earlier, I think ETRM was the last real big squeezer we've had, maybe HTGM or something like that. But there really hasn't been, actually, you know what, GLYC was probably the latest. But GLYC was a much higher price stock. We haven't really seen any of the 2 to 4s that went, nuts. GLYC was the 8 to 10 to 12s, much easier to borrow, bigger name, but it was just a game of numbers and more buyers and held, and it squeezed. And so beyond that, I mean, in recent years, the last 2 years, I mean, we used to have a crazy runner every single week, but there just hasn't been, which is also what I was hitting upon earlier. Stocks under 5 or so. I've been pretty good with momentum stocks under 5, but recently I've been slow, and like I've always said, it's adapt or perish, and the biggest thing is adapting. I've been slow to adapt on low price stocks that these things do not have secondary runs, and for whatever reason I continue to be patient with some monster winners, and then I end up just sort of holding it back to where I got in, or even turning it into a loser. So that's the unfortunate part of being a little bit slow to adapt, especially in this market. But other than that, everything's the same. And, it's just, Cam wanted me to make the point there with the easy to borrows and stuff. It's just, it's a little bit harder for people to get availability. And because of that, most traders are actually long biased, and then you're starting to get some serious pullbacks like HTGM out of the open this morning.
Cool. So bear market. Hey Nate, have you ever traded through a full-on bear market? Is it still possible to make money? I don't want to get in at the top of the market. Do the patterns still work in a bear market? This is from James.
Well, keep in mind that, I'm a bear at heart. So, I mean, I personally prefer pullbacks. But even this obviously we're still towards the highs, but even that big pullback day, I mean, the pullback day was great, but the next couple of days, you think maybe more panic, and then it just floats right back up. So it's really, you want to nail everything, but the key is just to come to the morning prepared with your ideas, and don't worry about if we're in a bull market, a bear market, what's going to happen tomorrow, whatever. The only reason that you should care about that is if you're invested, if you're fully invested in the market. Otherwise, who cares if we're in bull market, bear market? All that we care about is stocks are moving. And absolutely, it's possible to make money. I mean, shorting is a wonderful thing, and even in shorting, even in bear markets, there's stocks that go up, and there's also ETFs and all kinds of other things that make for great longs. So, it's just coming to the market prepared and trading the same setups. Yes, they work because, think about it. We talk a lot about failed follow-through momentum. We talk a lot about the backside of the move, things like that. There's a lot of short geared plays that would be perfect in bear markets. So, boy, Jim Cramer lightning round.
We're up to the lightning round. I don't know what the rules are. I guess 10-word answer max.
Do you have the buy, sell button?
No, I don't. I should have come better prepared, right? So I'll ask the questions. You've got up to a 10-word response. Best ways to do... Okay, good. Best way to do taxes as a trader?
Hire a CPA that's familiar with it.
Which indicators do you use?
Most important, VWAP now, which is way different than what I've ever said in the past. But VWAP, 1-minute charts, daily charts.
Price volume on a candlestick chart, right?
Correct.
The right time to go long or short? 10 seconds.
Long dips above VWAP as long as trend is holding. Short pops below VWAP as long as trend is holding.
Wow, I thought that guy was going to get written off for that question. How to avoid getting stuck in a hold?
It's difficult. Just be aware of the situations, like ADMP today. If you're staying familiar with bios and stuff, you know that it's going to halt on the day that it's supposed to have news.
And the other thing is avoiding volatility halts. You can do that by gauging how far it's traveled within a certain amount of time. So if you don't want to get stuck in a volatility halt, I've gone over 10 seconds. Is it possible to get a mortgage as a trader?
Yes. However, you should consult a tax professional, but you need to have an LLC that pays you wages for 2 years. It's actually very difficult because they don't care how much money you have in a bank account.
Right. How do you deal with the pattern day trading rule? I guess you trade less than 3 intraday round trips within 5 days. So you're more selective about what you trade. Nate, do you trade futures?
Absolutely not.
Do you trade Forex?
Absolutely not.
Do you long more than you short?
I prefer to short. I'm more comfortable shorting, but I've longed more recently. Yeah. But I think most of my money is still made on the short side.
Cool. Next page of lightning round. What's your favorite place to visit?
Oh my.
Vegas during trade.
Bahamas and Vegas.
Right. Vegas during Traders for a Cause, I think is the best 4 days of any year that can be had.
Yes.
Trading with distractions / kids.
Right now, fine. But she's not walking yet, so we'll see what happens. But it's been good so far. But as far as like distractions and things like that, it's going to be more than 10 seconds. But you just have to figure out, especially if if you trade at home, you're going to figure it out. If your wife's at home or girlfriend, whatever, she needs to understand that you need to just sometimes not talk or not answer or not be present.
You got to let him know.
You kind of figure it out over time. But as far as distractions, I've heard, Phil, for example, Ozark Trades, he's like, you're screwed when you're 2. because they love to just jump in your office, come say hello and all that kind of stuff when you're trying to like focus. So we'll see what happens, to be determined.
Okay. Average time until profitable. It's a pretty subjective question, right?
Yeah, I mean, some people pick it up right away. Some people takes years. Some people it never happens. So
Right.
it's all relative to, it's not even what you put into it. It's just whether or not make it simple. Make it as simple as you can and try to absorb as much as you can, but don't overanalyze it.
Right. Market or limit orders.
Limit. Market's fine on E-Trade, for example, is fine on stocks, Yahoo, or for example, NUE today, stuff like that, that's trading millions and millions and millions. But look, if you put in a limit order, you can always put in a little bit of slippage. So you can put in 5 cents, 7 cents, whatever above, the recent offer. So if you don't fill at best offer, you can still, swipe the offers and get your fill, but at least you have a limited risk. Yeah. Whereas, you might get some crazy slippage if a stock thins up and you have a market order. So
what I could recommend on that is limit, or what Nate just described is called marketable limit, right? Where you're hitting the market, but you've got a limit on what price you're going to pay for it. We've already done traders for a cause. Average time in trade.
Hours now.
Hours, right?
Yeah, I've been working on being patient. Sometimes it works, sometimes it doesn't. But usually, what did we do, Cam? The last time it was around 2 or 3 hours, or maybe even 4 hours, right?
I think it was 2 hours. 2 hours. 2 hours when we last pulled the stats.
Yeah, 2 hours. So on average, probably a couple 10, 20, probably a couple 5, 10, 20-minute trades, and then a couple probably 2, 3, 4 hour plus trades.
Yeah. Percentage of overnights.
I rarely do it. I like to come to the market, clean slate, not have anything happen. Sometimes it's the best thing in the world. Other times, I held 2 over last night. One worked out. It had actually a week open and it ended up ripping. The other one just gapped down a dime and, it sucked. So, sometimes it works, sometimes it doesn't. It's really just, I personally like just being cash and not having to deal with anything.
Cool. So the opposite of that, investment and 401k.
Yeah, so on that same note, as far as overnights, if I am looking to gap something, if I'm looking to hold something over, typically I will put it in the IRA, just because that's sort of the more of the swing, bigger picture idea account versus my day trading account where I see it every day and I'm focused on that. And, IRA is sort of, I got to click a couple buttons to get to it.
Cool. Discounts for joining IU. So Investors Underground. Actually, I'll tell you what I'm going to do. I'm going to pull in a browser so that everyone can have a bit of a look. So this is what it looks like to be a member at Investors Underground. You've got obviously all of your resources are on this page. Upcoming webinars. So we've got a calendar of our schedule of webinars with a variety of different moderators. But just to give you a bit of an idea on, the depth of content within our community, we've got a huge archive of webinars, of video recaps, of, lessons, basically that comes through here. So if you're having a look at, the webinars page, you can sort via different moderators. You really got pages and pages and pages of webinars. You come to one of these ones, well, it's, Cody does a webinar and this is a 55-minute webinar. Obviously, you can full screen it and he goes through charts and trade examples and, Q&A with the members. And then, Nate's got his video lesson archive where, almost on a daily basis, he's going through and talking about what he did well, what he could have done better, where there were opportunities to make better trades, opportunities to learn from. So, we'll go into one of these. And 16-minute lesson, and this is lesson 1383. So if we go to scans, Nate, we'll open up a couple of these. This is Nate's scan for tomorrow. So, Nate, when did you post this?
Hour or two ago.
So these come usually 7, 8 p.m. Eastern time. And you can see a bit of a recap on the day, what he's looking for from the next day, and charts with, a bit of a plan. And for more action, you come into the chat room, watch the action and get a little bit of vicarious experience, by watching the ways in which other people trade. So that is the Investors Underground community. As I said, scans, chat room, webinars. We set up a special deal for everyone who is attending this webinar. If you go to www.investorsunderground.com/Q&A, we've set up a bunch of custom deals on this page. So if you are interested in getting access to any of that content that I've just been through, then you can visit this and get access immediately. The other thing I wanted to mention is, if you haven't already, check out the Investors Underground YouTube. It's www.youtube.com/investorsunderground. And Nate, how can people get in contact with you, via the chat room or email? What's the best way to hit you up?
PM on the chat room, or just Nate at investorsunderground.com.
Cool. And you can hit me up. I'm Cam at investorsunderground.com. I'm in the chat room every day as well. We personally get back to your emails or your PMs. So drop us a note, and we look forward to hearing from you all. So thanks so much for attending. That's pretty much a wrap for today. Again, if you've got any questions, don't hesitate to drop us a note. Hope to see you all in the Investors Underground chat room.